Morning, this is Wayne Blau with another smart profit maximizing moment. Today we're going to talk about how to cut your taxes in half in 6 easy steps. This is mainly directed obviously towards business owners. Before we get started, my name is Wayne Blau. I'm the founder of a local CPA firm, started in 1991. Been working with hundreds, thousands of small business owners, helping them succeed. We basically focus on three things. One, we focus on doing your tax return in a way that cuts your taxes, to the lowest allowed by law, doing it correctly without attracting attention. Second thing we do is what we're going to focus today's conversation, which is we do tax planning. In the last 3 years alone, we've helped our clients save over $4.3 million, and it's still growing because we're heading into another tax season. We'll probably be five something by the end, easy. We do this legally, and we're going to talk about the 6 steps that every business owner needs to be doing in order to cut their taxes. And the last thing we do is why we do these videos. We help our business owners make more money. And keep your eyes, it's got exciting news. July 8th, looks like we finally got all the bugs worked out, got things going. We'll launch our first inaugural challenge. And this one's going to be about transforming your business, all right? Too many small business owners, like I said, cutting your taxes in 6 easy steps sounds, and I say cut it in half, who knows? I mean, some 20%, some 80%, depends on every situation is different, okay? But every single one I work with can cut their taxes, even the ones I don't do tax planning with, where it's like, I can't really save you a lot, but here's a few steps you can do, save a few $1,000s, which is money that they don't pay. In fact, just about every client I do tax planning with, I save them more in the tax planning than they ever pay me that year. Okay, so I work hard to make sure I'm not a cost. I'm an asset to the business owner. Too many business owners, though, hire a tax preparer and think that's the secret to paying the lowest tax. They basically turn it over and late, usually with bad records, and say, go do it, all right? And once they drop it off, they think they're done. They don't do anything to control their taxes during the year, all right? Which leads them to often being surprised. Wow, look, you owe $80,000. So they get upset. They go to, they fire that one, go find another one, and another tax preparer. Their friend said, oh, I made this money and I only paid this much. So they go to his preparer. And the problem is they still don't do any planning. So the problem is they brought the problem with them, which is them. They think that there's a magic here. And we run into it all the time. People come in, well, isn't there something you could do? Or I don't know. No, the law is the law. Okay. But knowing the game, we can help them a lot. The truth successful business owners learn the hard way is Uncle Sam's your partner. He's not a good partner. He's going to take a quarter to a third of your income, give you very little in return, but it's a necessary fact of life. In truth, smart business owners understand that income tax is an expense like any other. It's like paying the rent. It's like leaving the lights on. It's like paying your staff. Accordingly, it's something that should be managed, all right? So let's get into the 6 steps. First, smart business owners do mid-year and year-end tax planning. After the first year, there's very little. After the year end is over, okay, there's very little arrows in my quiver. There's a few things. I can make sure that you pay, some decisions on how to depreciate, how to set yourself up, a few things I can do, whether to fund a SEP and things like that. There's a couple things I can do after the fact, okay, but not many, okay. Before the end of the year, though, we can structure our business in a way that makes sure that your business grows. That your business taxes are minimized. And we do that all the time, all right? Now, make sure, though, that you are using legal methods of reducing income tax. Don't fall for everything, all right? Make sure you know the law. When we sit down and put a tax plan together, I'm providing in the package I provide them the code section, the doc, I give them all the citations, code sections, court cases, regulations, IRS regulations, so they know everything they're doing is legal, because there's no reason to have to pay it back later with penalties and interest and then all the cost of having an audit just because you tried to save a little money now. Remember, even if you hire somebody, you're ultimately responsible for the audit. Second thing, smart business owners call their tax provider before they make any major decision. Happens to me all the time. They incorporate it, without telling me. But let me tell you a simple story. I had a guy that's a client of mine for a long time, knew I didn't charge for phone calls. Just call me up. I'd rather you called me. And, his golf buddy told him once he turned 59, he could take money out of his IRA without a penalty. So he took out $50,000 2 or 3 weeks before he turned 59 and a half, which happens to be the law. You have to be over 59 and a half to escape the 10% early withdrawal penalty. So that cost him $5,000 because he didn't pick up the phone and call me. Okay, so don't make a move like understand taxes involved in everything. At least give us a call and see if there's a tax consequence. Sometimes you'll be surprised. One of the ones I get a lot is, I inherited something from my mom. Do I pay taxes? No, inheritances are tax-free. Third thing good, smart business owners do is they keep good accounting records, all right? They don't drop off shoe boxes full of receipts that are tax prepared. They understand that good accounting records ensure they can deduct everything that is business related. With current technology, there's really no good reason not to have great books, all right? I got apps now that can track your mileage. You got another app that's to a credit card that'll capture your expenses and even enter them into your records for you. Smart business owners get their records to their tax preparer early. A few years back, I looked at 50 returns in the last 2 weeks before the October extension deadline. There's no way they could have. I did about 50 returns. All right, I try not to do that anymore because there's no way I can do that many returns and give each of them the service they need. And really, what people don't understand, when I'm doing a tax return, all I'm really doing is I'm looking to make sure that it's done correctly. I'm not really doing tax planning. We're following the law and put it together and don't attract attention. Tax planning, like I said, one of the first steps is where we look to make sure you're paying the lowest possible. Smart business owners save money as they earn it, all right? When you were a W-2 employee, or even if you are now, the taxes are taken out as you earn it. If you made $1,000 that month, you might get $850. The rest is being saved for the end of the year when you file your tax return. Problem is, when you're a business owner, you don't save. Nobody forces you to save it. So you need to set it up. One of the steps that you do, if you owe $20,000 and your business did $200,000 in gross sales, then you need to save 10% every year. That's a lot, but I'm just did it to keep the math simple. Okay, it's not a lot if you're a Schedule C. All right, so that means you were set up wrong. All right, number 6, smart business owners get a basic understanding of the income tax law. They don't become experts, but they do learn how the game is played and learn enough rules so that they can take advantage of it and structure their business in a way that they can deduct it. You're going to take a trip. There's ways you can do it where part of the trip or all of the trip can be deducted if you do some business there, legitimate business, and document it, okay? Many of my clients are very skeptical that these 6 steps can do anything. Here's one I did: a consultant company, $244,000 in savings. We cut their taxes by 54% from the first estimate. Retail company, we cut their taxes by $108,000, 67% from their first estimate. Manufacturing service company, $124,000. I got a construction company last year, we saved them close to $700,000. All right, a lot of them were $20,000, $30,000, and $40,000. Which doesn't sound like a lot, but if we do that every year, let's take the low end. $20,000 for 10 years is $200,000 you didn't send to the IRS. Okay, what could you do with the $25,000? Do you really want to continue overpaying your taxes? And when you know now that they can be reduced, the trick is to treat it like an expense, like any other expense that you would control and manage it. And I've just given you 6 steps on how to manage it. Hey, until next time, this is Wayne Bilal saying, let's make this our most profitable year ever. Thank you very much.